In this video, we are going to go over a very simple strategy that you can use to trade news events just like the NFP. So let's quickly go over how this works. So essentially, you are going to trade, NFP just like this. So you're going to have price moving down like this as an example, okay? Price could be moving up as well. I'll show you that flip side shortly after I do this one. But then when price gets to around, let's say 11 a.m. to 12 p.m. The day of the NFP event, essentially what you're going to have is you're going to have price start to range. Okay, very simple, very nice range. And this could be candles, sideways, or price actually pinging up and down within a box. And that's what we're going to be seeing. And then you're going to have your news event, which is going to break out to the upside or break out to the downside. Okay, so let's just say upside in this case. Okay, so what you're going to do is you're going to get your tool, your rectangle tool, and you're going to draw a box. And in that box, you're going to draw and you're going to cover the low and the high. So again, I appreciate that sometimes, these consolidations or price moving sideways is not going to be really simple and really easy to see. In those cases, it's just going to be harder to trade this strategy. But when it is nice and simple, you will trade like this. Ideally, you want to be looking for this consolidation on the 15-minute time frame or the 30-minute time frame. I particularly use the 15-minute time frame, but you can also use the 30-minute time frame as well. Okay, so once you have that, and this is what it would look like if I invert the scale for price moving up and then coming into this area. Then in terms of entering the trade, very simply, all you're gonna have to do is, let me just put the scale back, is this. So let's say we're going to take a buy trade. We're going to put our limit just above, so not exactly on top of the box or on the the highs of the box, just above the box, and your stop loss is going to be at the bottom of the box exactly, or maybe just a bit below, depends how you want to do it. And that's what I do. And then my target is always a 1 to 2. So if I just do this, so that's going to be my target there. Okay, and what you will see is generally price will just push straight up and take you out for a 1 to 2. Sometimes, and if you're very lucky, you'll be able to get a 1 to 3 and squeeze a 1 to 3 out of this, but most of the time it'll be a 1 to 2, and if you're unlucky, it'll be like a 1 to 1 or something like that, or price actually takes you out. And it depends, because sometimes what you'll have with NFP is you'll have a candle like this. So you have like a small body, and then you have a massive wick to the downside, a massive wick to the upside. If that's the candle of that day, then it's unfortunate, but it can happen, and it's just the risk you're gonna have to take. Again, when you're trading this strategy, you have to understand that this is news. We don't know which way it's going to go, and so that's why we're essentially guessing. But again, when you're taking these trades, you will be having, let's say, a buy trade like this and a sell trade on as well, like so at the low, so just a bit below the low, stops again at the top of the box, and you're going to be aiming for a 1 to 2 like this. So there you go. So that's what your setup's going to look like for every news event, because we don't know if the price is going to go up or down, but we're going to use this consolidation box to better understand which way price is going to go. And this is generally what happens. So now that we understand what's going to happen and what we're going to look for, let's have a look at some examples. Okay, so as we can see, we are at January, and this is how far I've gone back. I thought I'll just do the whole year. So as we can see, we get to about 10:11 a.m. and because I'm based in the UK, so this is what I'm looking for, and 1:30 is the candle that is generally the NFP candle. So straight away, what I'm going to do is I'm going to highlight a box. Now when it comes to the box or the consolidation, you normally go for this one, but this is the 115 candle, and because this is the 115 candle and it's like pushing up to the top side of the box, what I'm going to do is I'm just going to extend it to this wick here. So that's the top of my box, and this is the bottom of my box. Again, when it comes to taking the trade, what I'm going to do is I'm going to just put my buy stop just above with my stop loss to the low, and then I'm going to put my sell stop just here with my stop loss just at the top. Okay, so it's very simple. And then again, you can target a 1 to 2. Where is that? There, and a 1 to 2. Very simply, and it's super easy to do this. And then what you'll notice is if I just press the next candle, see we wick down, we get tapped in at this point, and then we push up. Bear in mind that when you do take these trades, I'd say most of the time, you're gonna get slipped, and it's just part of trading news, and it's something you should get used to. And you'll see that we actually come back and retest the box. Now this is something that happens quite often. You'll notice that price will push up, come back, retest, and then push away. That does mean sometimes you'll be able to get in on the retest, but other times, price is just going to come and take you out. And there you go. There's your 1 to 2. You could have, pushed for a 1 to 3 as well if you wanted to. Maybe looking at this imbalance to be filled or whatever to the left, really. But yeah, so that's one really good example. I'll show you another one. Okay, so let's have a look at this. So this is February now. So the one before we did was January, and now we're looking at February. So again, we're looking for a consolidation. Very simply, we can see we got the low here and we got the high over there. Price is within the box and it's not pushing to the downside too much or to the upside too much. So again, we can just take the low of the box. So that will be here. So just below, stops at the top, and then targeting a 1 to 2 like so. And then same for the upside. So entry here, stops to the downside, to the bottom of the box, and then we're targeting a 1 to 2. So very simple, very nice strategy, and like I said, it does work quite often. And boom, in one candle it pushes through, and as you can see, this is a 130 candle and that was the 115 candle. Very simple, very nice. Now what I'm going to show you is one more example, and then I'm going to go over some Trader Edge backtesting results of how well this actually works. This video is sponsored by Vantage Markets. If you are looking for a trusted broker, then look no further than Vantage Markets. I have been using them since 2018 and have enjoyed using them as my personal broker. They are a multi-regulated broker, and so they are reliable, and I have never had a problem when it comes to withdrawing or anything like that. They also have accounts with low spreads and commissions to make trading all the more worthwhile. So if you are interested, then make sure to click the link in my description to go check them out. Okay, so final example is this month's one, so the 5th of May, which was yesterday for me. So what we can see is we can draw a box on really nicely. So I'm going to go for this low because it's just a bit low and it looks nice, but you could draw your box like this, but I'm just going to extend it to this low there. Now what you will see is that the 115 candle here is actually pushing lower. So what I'll normally do is I'll look for a low just below, or actually below this candle. So that's something you can do. And another thing you can do is if price is breaking already, so let's say that's your box, okay, and this is quite subjective, but if price is breaking below your box already at 115, that could be an indication that price is going to go down. So you could actually just take this trade from here with your stops just above the box, so straight away like that, and then you can target a 1 to 2. And this is something that can happen. I've seen it happen quite a few times, and so it'd be worth doing something like this. But if you want to go for your standard up and down, you'll have something like this to the upside. So where's that 1 to 2, and then let's see how price moves. So as you can see, straight away you get tapped in really nicely, and then tapped out again with your take profit. And as we can see with this one, I think it comes in, does it? Nope. Okay, so we get tapped in and then you get tapped in on your other one as well, and that's something that could happen. But what I would suggest is when you are taking these trades, as soon as you get taken into a trade by one of the stops, I'll remove the other one. And that's another good example. So what I'm going to do now is I'm going to quickly share with you the backtesting results of this strategy. So there's only been 5 trades because we're 5 months in, as you can see from here. 80% win rate, looking really good. 7.16%. So as you can see, it's making 2% and risking 1% on a trade. 4 wins, 1 loss. Really nice, really simple trading strategy. If you are someone who trades the news like I do occasionally, this is something that you can look into. If you are wondering what software I'm using to record these statistics and my backtesting results, this is called Trader Edge. It's a really good software that you can use to record your backtesting results. It gives you all the statistics you need here, alongside allowing you to set your initial account balance and what you're going to make per trade and what you're going to lose per trade, as well as give you some key information about your backtesting results. If you're interested, make sure to click the link in my description to check them out. And again, that was a really simple video I wanted to make. Thank you for watching, like and subscribe, and I'll see you in the next one.